Yeah, look, I mean, these were a very good set of results. We're encouraged by the progress we're making. Second quarter in a row of bottom line profits. Actually, it's our best 6-month results since the first half of 2014. Income up, cost down, operating profits up a lot. But we know that we've still got the Department of Justice to settle. We would aspire to get that settled this year, and provided if we do that, that could well push us into a bottom line loss.
How real a possibility is it that you get the DOJ done this year? Because that's a bit of the black cloud hanging over the numbers for 2018, isn't it?
Well, look, we would love to get it resolved if we could, but we've got no further update today.
Now, look, PPI, it looks to me no more substantial provisioning there. Are we done? Are we finished with PPI? Can you assure the investor out there we're done, we're dusted?
No, look, I've made that statement a number of times, but we took about £600 million of provisions into last year's accounts. We knew at the time that we were doing that. We were trying to be cautious. We think we continue to be cautiously positioned, but I'm not going to sit here and say that we're done on PPI.
Now, the one story with every banker that I sit down with is Brexit and preparedness for Brexit, and a prudent CFO is always prepared. An update on your Brexit contingency plan?
Well, you'll see in today's announcement that we're announcing that we are in advanced discussions with the Dutch National Bank about setting up a small European headquarters in Amsterdam. Very, very logical market for us. We've got a bank there. It's got the right licenses for us. Right decision for us, but it's just sensible contingency planning at this point.
How many people are we looking at potentially?
Look, we have a relatively small markets operation. I don't think it's a large number of people, but we're in discussions with the Dutch regulator at the moment. We're in discussions with our own people.
Look, it's always going to be difficult. I talked to various banking heads, and there's this migration to Frankfurt. I just wonder your opinion in terms of being potentially outside that scalable ecosystem that appears to be happening in Frankfurt. Any concerns there?
No, not at all. I mean, as you know, the Dutch National Bank is very, very familiar with regulating investment banks in the past. We've had a long history there going back to ABN AMRO days, so we're very, very comfortable setting up our business in Amsterdam.
Now, let's talk about the story of growth. Second consecutive quarter of attributable profitable to shareholders. Where does the growth story come when I talk about RBS as I go into 2018?
Well, if you look at today's numbers, continued very, very good growth in mortgages for us. We're growing about 3 times faster than market growth rates in the first half. I think we're going to continue to prioritise in this environment secured lending over unsecured in the personal side. And in SMEs, we're again seeing good growth in the lower end of SMEs and business banking. I think at the top end, we continue to be more cautious. Commercial real estate, another area we're continuing to be cautious.
So those are the growth areas. I was looking at what the Bank of England has just recently said. Mr. Brazier sees lenders dicing with a spiral of complacency in car loans, credit cards, mortgage lending as risks. Is that a fair warning shot to you, the banker?
No, not at all. I mean, you can see in today's impairment trends, they are continuing to be very benign. We spend a lot of time looking for canaries in the numbers. We can't see those signs today, but we are going to continue to be extremely cautious and looking for any signs of weakness in the credit markets.
Because those levels of provisions are historically low. Do you think it's unnatural that we stay at those levels of provisioning?
Oh, no, we've been very, very open, and we've told the market that we're guiding for substantially higher provisions in the coming years. So we do look at the current level of provisioning as unsustainable over the medium term. So almost inevitably, I think credit conditions will deteriorate over time.
Are your customers, your corporate customers, I listened to Mark Carney as he's saying, you know, the darkest cloud hanging over the UK and optimism is Brexit. Is that what you're really hearing from the borrowing side, from the community of business?
Well, I think it's mixed across the customer base. Some customers are doing very, very well in this environment. Other customers are being more cautious. I think uncertainty generally, as we know, causes people to delay investment plans. So I would agree with the Bank of England comments yesterday that uncertainty is bad for markets, bad for investment.
But your overall outlook, it's almost like we're at an inflection point. Are you optimistic as you sit and look, you sit down with Ross McEwen, you look at the business, you look at the British economy and you go, look, there may be tough times ahead, but we're set for that?
Look, I think we've tried to position the business appropriately for what we see as tougher times ahead. But when we looked at those Bank of England forecasts yesterday, we're forecasting low growth, continued reasonably high employment figures. So we're not looking at a material market downturn, but just a persistently low growth economy. And we think we're well positioned for that.
Delighted to see that there's no prospect at the moment in the market of a rate hike, or disappointed?
Well, look, for us, we've got a lot of our funding as either on-demand or current account funding. We would benefit more than most banks from a rising yield environment. So we would welcome higher interest rates at some point, but we've positioned the bank for what it is today. You can see in our net interest margin, though, continued net interest margin pressure today that comes as a result of this rate environment.
And there'll be no abatement on that until you see a change in rates.
Yeah, so we're not planning for any significant improvement in that for some time.